Hello everyone. So it's been a while since I did a back test on gold, and for gold today, this is what we'll be looking at. So this is actually a 1 minute time frame. So you can see price taking out sell side liquidity, taking out these lows, rolling up, took out buy side, left a fair value gap open, traded down into the fair value gap during the after the silver bullet run, traded down into the fair value gap and rallied up to take out this high and trading into our Monday's first presented fair value gap. So this is actually Monday's first presented fair value gap. Like I said, I keep mine extended on the chart for the whole week, okay, because these are like reference points where price trades to. So let's say you have an high like this as a target, okay, and you know price is going to take out this high, and you have the Monday's first presented fair value gap just above it. You should know that after price takes out this buy side, it's going to go straight to the Monday's first presented fair value gap. Okay, that's the way it works. Same thing with a new week open gap and a new day open gap. Let's say there's a new day open gap or a new week open gap just above this buy side, which is my target. Okay, I'm not just going to set my stop loss just above this high, maybe very tight. My take profits just above this high, just a bit above this high. Okay, I'm going to allow price to trade into that new week open gap or new day open gap, just as price are traded into this Monday's presented fair value gap. So this is the 1 minute time frame, and we are going to do a top-down analysis. Okay, top-down analysis back test from the daily time frame back down into this 1 minute time frame. So we are going to look at how price graduated into this from the daily time frame down back here. So let's get to it. So this daily time frame and our back test is actually for on the 13th. Okay, the 1 minute time frame which I showed you and that run you see on price actually happened on this day, Friday 13th of February. So just like the Nasdaq, where I was actually looking for a run up, okay, to trade into a particular level, on gold you can see this 4-hour CB. Okay, this is actually a 4-hour CB. Let me drop down to the 4-hour time frame. Okay, you can see this inefficiency in price, the high of this candle and the low of this candle. Sorry, the low of this candle and the high of this candle. You can see this inefficiency is very clear if you've been following up with my videos. So back into the daily time frame. So like I said, I was expecting a run up into this 4-hour CB. Okay, but on Thursday, which is the day before the CPI news. Okay, the CPI news was Friday. The day before CPI, they did this, brought price back down, and I wasn't involved in this trade. Okay, and I was like, where's price dropping down to? Now on the daily time frame, you can see this volume imbalance. Okay, the gap between the body of this candle and this candle. You can see the volume imbalance. The wicks can overlap actually, but you can see the volume imbalance right here. Now price trades through the volume imbalance on the daily time frame. This is a 4-hour chart, 4-hour time frame. Price was actually trading down into this order block. You can see this down close candle followed by consecutive up close candles. Okay, so this is an order block, this down close candle. So this is a top down analysis, but that doesn't mean I'm going to go through every time frame. No, we are just going to go lower and lower and lower till we get to the 1 minute time frame. All right, now this is an order block, the open of this candle. Now you see how price respects it, and price doesn't. If you watched my previous video on Nasdaq where I talked about price Where I talked about price not trading and closing below the midpoint of the other block. This is the midpoint of this other block, the red line. Okay, so you can see price not trading below the midpoint of it. Okay, not just trading below it, not trading and closing below it. And you can see this rally up in price. So this rally up actually took place on February 13th. This rally up feeling this inefficiency. You see this CB right here, this down close candle, this one, this one dropping with displacement. Okay, that dropped with displacement into this other block. You can see the CB. It's very huge. Okay, I'll try and draw this, but it will mess with the charts. But I'll just draw it for those that are new to understand what I'm actually talking about. You can see price trading up to fill up this inefficiency on Friday. The high of this candle and the low of this candle right here. The high of this candle at 5 a.m. and the low of this candle at the low of this candle at 5 a.m. and the high of this candle at 1 p.m. This 5 a.m. Okay, 1 p.m. So you can see price trading okay to fill up this inefficiency on Friday, 13th of February. Now dropping down to the 1 hour time frame. Okay, this is the other block which price are traded into, and you can see the other block clearly on the 4 hour time frame. But on the 1 hour time frame, this is how it looks. Okay, this down close candle followed by this smaller down close candle. Then you see these consecutive up close candles. Okay, validates this as another block. Now this is the open of that down close candle. Once price trades down into it, okay, and you are good with the market. This is for those who are good with the market. Okay, and you know this is going to rally up. This is a good point to actually place a trade. So let me take this off. And prior to the New York AM session, okay, let me just mark 8 a.m. Prior to 8, you see price taking out this low to grab buy side, sell side liquidity. Now let's drop to a smaller time frame, 30 minutes. Now this gets even more interesting. Okay, why price drops down to take out this low to grab sell side liquidity, it trades into another order block. Now remember, price has traded into another block previously, which I showed you on the 4 hour time frame. Let me go back. This one right here, price traded down into it. That was on the 12th of February, right? Now on the 30-minute time frame, on the 13th of February, price traded down to take out this low prior to the New York AM session, and also trading into this other block. You see this down close candle followed by this up close candles. Okay, this down close candle is actually an order block. So we have too many black lines. I'll make the lines for the other block red. So this is another block below. That's the one you saw on the 4 hour time frame. So price trades down into it and respects this other block while taking out this low to rally higher. Okay, on the rally up, you can see this fair value gap created still prior to the New York AM session. Now this is clear confirmation that price would rally higher even when you're not on a trade. You know that okay, price is going to rally higher. Now let's label this 30-minute fair value gap. Now you see this drop down right here in price. This week traded down into this other block. Yeah. Okay. This down close candle was formed at 8 a.m. Okay. So the New York session is in play at this time. And this drop down into this other block was done at 9:30, which is the market open. Now, how is that a coincidence? I mean, exactly at the market open, price is dropping, trading down into an order block and rallying up with speed to take out buy side. How is that a coincidence? Doesn't that tell you that the market is algorithmic and that the market works with time and then price? So the market operates with time and price, and you can't analyze one and ignore the other. You can't work with time and then ignore price. Same way, you can't work with price and then ignore time. So you have to use both. So let's mark out this other block right on the 30-minute time frame. Remember, we are doing a top-down analysis for this back test, and we are going to drop lower. Here's the 15-minute time frame. Okay, still on the 15-minute time frame. Okay, sell side taking out on the 15-minute time frame. This is how this other block looks. So this down close candle followed by up close candle. Price trading down, taking out the sell side, dropping into this other block, rallying up. This was the fair value gap created on the 30 minutes. This is the 30 minutes fair value gap, and this is the 15-minute time frame. And you can see the 15 minutes time frame and the 15 minutes fair value gap and the 30 minutes fair value gap they are almost at the same point. Okay, so I'll just leave it like that. Then you see that other block formed at the 30-minute time frame. See how it looks on the 15-minute time frame. Okay, rally up and price training down to the other block. Down to smaller time frame, 5 minutes time frame. Now this is getting clearer, okay? Now, why price traded down into this other block? Okay, this is how the other block looks on the 5 minute time frame. So for the 5 minute time frame, I'll pick just this down close candle and this up close candle right here. And also you can see price taking out this sell side, this low, trading below this low, taking out sell side and displaced higher. So I'll make this black, right, for our sell side. Then the other block can be red. So finally, the 1 minute time frame. It all makes sense. So this is the market open 9:30. Also, your time zone should be set at New York. You can see mine is at New York. To get this correctly. Now this is that 1 minute time frame I showed you earlier, and I'll quickly annotate everything. So this is how it looks. Okay. So after the market open at 9:30, okay, price dropped down into this other block, which was very visible at the 30, 15, and 5 minute time frames. Okay, on the 1 minute time frame, you can't really note the other block, but also on the 1 minute time frame, you can note this sell side liquidity, and you can spot that it's a relative equal lows. There are relative equal lows on the 1 minute time frame, this low and this one. Okay, with this one at the left slightly lower than this one at the right, and price dropping down after 9:30 to take out this low sell side liquidity, to grab sell side liquidity, and also into this other block. Then price traded higher up to this high right here. Couldn't take out this high at this point. Drop back down. This is the Friday's first presented fair value gap, and you see how price uses it to bounce up to take out these highs, this high and this high. So these are actually buy side liquidity traced down into the Friday's first presented fair value gap. and took out these highs. Okay, meanwhile leaving a fair value gap open, a pocket open below price at discount to this. There's a fair value gap. Now after price takes out these highs, okay, taking out buy side, creates a swing high, trades down, comes down into the fair value gap, and then rally up to take out this high right here, and also trading into the Monday's first presented fair value gap, which I would show you on the higher time frame. See, this is it. Monday's first presented fair value gap. So like I said, I keep it on the charts for the whole week, and you see how price respects it. Okay, see how price makes use of this level right here. Monday's first presented fair value gap, and I respects it. So I hope you found this insightful, and if you've gained from this, drop a like, subscribe to the channel if you haven't, and also my playlist for ICT 2022 model is going to pop up at the screen at the end of this video. So you can follow up with the playlist and also share with someone who may need it. So until next time, have a productive week.